and then we'll also look at a brief session that's going to cover support and resistance. So, like we usually say, if you have any questions, please go ahead, put them in the comment section, and we shall be able to answer your questions. Yep. I think we have enough quorum. Let's start off. If you have any questions amid the session, just go ahead and unmute your mic. Let me know of the question. All right, so I think we can start off right away. So, 31st of October, very last day in the month, and we are coming to the close pretty much of this month. This month started off very, very bullish. But we got by the 10th, we had the biggest liquidation event in crypto history, and then ever since, the month has been just staggering a bit, in and out, in and out, in and out. So we've basically had a very bearish October, given the statistics that we're seeing today. So what we're seeing here, overview, of course, I'm going to just start off with my CoinMarketCap application. CoinMarketCap application basically ranks the biggest assets with the most amount of money invested, and then it will also give you some more data that can give you some information about the crypto markets. So that's where I'm going to go to. It's basically called an aggregator. If you've ever heard of the word aggregator, this is what we call an aggregator. It basically collects a lot of data, puts it all together in one place, and you can be able to read it and make sense or make something out of it. The second aggregator that we have is CoinGecko. If you've used CoinGecko, those are the two major aggregators that we use to try and find information about different assets on the market. If I have CoinGecko here, but I believe there it is. So this is the second aggregator. If you've not used CoinMarketCap, you can use CoinGecko. It will pretty much give you the same information. I don't know what they're telling me to do here. Okay. It will pretty much give you the same information from a different angle. So basically, coin rankings and everything else you need to know about an asset. That is, if you wanted to read about it, you'll find information. Markets are basically the exchanges where you'll find this asset being traded, ranked from the one that has the most volume to the list, and then other things. So I'm going to go with CoinMarketCap. So what we are seeing here this morning, we are seeing a very red day, very red open of the day. Like we usually say, and like I've said before, when Bitcoin is bearish, very likely the market is going to follow. So basically what that means is we are always going to use Bitcoin as our North Star. It's basically what we are going to try and look at to understand generally what the market is doing. So let me also look at something different here. This is maybe PIPS. Sentiment. Secondary risk-off meter. Okay, so we usually look at this to try and gauge where Bitcoin is being ranked in terms of risk on risk off. So what we can see on the risk on risk off meter today is Bitcoin is in the neutral zone, as you can see. So we said when Bitcoin is bullish, we want to see it cross over the 65 and playing within this area, the green area. But then we can see Bitcoin is in the neutral zone, and many of the other assets are pretty much not doing well either. We can see pretty much no assets, that are American backed are pretty much in the good zone. So as of now, we can see Bitcoin is in the neutral zone, however, tending towards the green zone, which is usually what we want to see for the markets to go up. And for the market to be entirely bearish, of course, you will find Bitcoin in the risk off area. So what does that tell us of the market today? It basically tells us that the market is very much consolidating. Not so much moves in the upward direction, not so many moves in the downward direction, not until there is some momentum that is picked up in the market. The other thing that we can look at, basically trying to find sentiment. What I'm taking you through is basically what we call sentiment analysis. So when we try to find the sentiment of the market, when we come to this application is called CoinGecko, it usually gives us an overview of the liquidity on Bitcoin. So when we look at this, Bitcoin has swept so much of the upper liquidity on the upper side. So there isn't so much liquidity on the upside. There is some liquidity cluster that is developing on the downside. And we are seeing just 46 million in the market. So still the volumes are very low. Liquidity clusters account for very small numbers. The biggest liquidity cluster, of course, is lying down here, which is seated at around 46 million US dollars. That means very low on the low side. We have another liquidity cluster that could be of meaning, which is up here, versing the one that is below, which is this one is around 39.9 million. Basically what this means is there are short traders who have decided to short the market, and the biggest liquidity is lying at that level. What usually happens is the market has a tendency of hunting big liquidity clusters. That is, big liquidity cluster is the one that is in the biggest yellow zone. Yeah. When you see this, there is literally almost no liquidity lying in that area. But then when you see this yellow, that is the highest liquidity that is lying. So basically what that means that these bars are all representing liquidity in the past 24 hours on Bitcoin trades, that is shorts and longs in the market. But then we are most interested in where liquidity is lying the most, where it is yellow. Where it tends to yellow. So as you can see, 46.28 million exactly lies at 105,587 price. So that is the highest liquidity in the market. We can see another yellow zone at the top this side at about a level of let's see, at the level of 111,988.7 US dollars. So it is slightly lesser than the one that is lying down here, and that is 39.9 million. Basically what we use this information for is to try and determine or to try and predict where Bitcoin is going to hunt liquidity next. Yeah. So previously we saw Bitcoin hunting liquidity around this level, and Bitcoin also hunted liquidity around that level. So it has already cleared liquidity. So within the closest range, there is not much liquidity on the low side. There is a lot of liquidity on the high side. So when we look at this information, we can try and tell, or we can try and build confluence around what is the most probable area of liquidity hunting that Bitcoin might take. Yeah. So seeing that the highest liquidity is on the low side, very likely Bitcoin is going to hunt down the liquidity. But we need volume. We need more volume than what we are seeing in the market to be very sure of where Bitcoin is headed next. But rule of thumb, Bitcoin usually goes for the highest liquidity cluster most of the time. So given that the highest liquidity cluster is at a lower price, then we can try and predict that Bitcoin is going to go in the short direction in the short term, unless otherwise. Bitcoin is heavily bearish according to the information that we are seeing here. All right, so when we try and combine all that information, right here, what we see, the liquidity is lying. Or maybe the other thing I need to also explain is basically the liquidity cluster means there are a lot of traders who have longed the market, and their liquidation is at that price level. Yes, their liquidation, the highest liquidation cluster, liquidation levels of different traders is lying at that price level. I failed to really nail it, but yeah, you get the point. Yeah. So basically, that means that long traders, their liquidation levels are lying here. The most liquidation levels are lying there. So these ones decided to long the market and they believe the market is going to go upwards. However, these ones decided to short the market and the highest liquidation level is lying at that price level. Bitcoin has a tendency of hunting the most liquidity in the market. That is, they act like magnets. They attract the price of Bitcoin to go to that direction. After the sweep, usually Bitcoin tends to take a different direction. For example, I can give you an example here. For example, here, when Bitcoin swept this liquidity here, it first of all kind of retraced and then it finally continued. Of course, we cannot see past liquidity levels because, of course, when liquidity is swept, the clusters disappear on this chart. But then what we can see is we can see this, we can see that. Then you can come back in about an hour or two, check on this graph and see where probably Bitcoin has gone. Or maybe in the evening, you'll be able to see and note where Bitcoin definitely decided to go. So you can learn about how to use it in terms of sentiment analysis and confluence building. All right, so seeing that we do not have a very red day, rather very green day for Bitcoin today, so we can then go to the chart here. You can go to the chart. Everything we've seen so far is pretty much bearish. Now let's come to the chart and let's try and see what is happening on the BTC USD T chart on Binance. All right. So when we look at the chart, I'm going to go to the daily. I'm going to go through the daily analysis like we usually do. So when we look at the chart says nothing different from what we have seen already. So when we look at the previous day's candle, it took out the previous day's, the other day's candle's low. You get it? And it closed bearish. Okay. So we said when this was the previous day, that was Wednesday. So the Thursday candle, which is yesterday's candle, of which that is the one we look at to try and determine the daily bias of the day that we are in today, the candle that is printing today. So to try and determine the candle and how this day is going to perform, we look at how this candle closed in relation to how this candle closed. So when you look at this candle, of course, this candle closed bearish, and then when this candle came, it took out the previous day's low. This was the previous day's low. That is, on Thursday, Wednesday's low was this level. Okay. Now, Thursday candle came and pumped hard, but then it also dumped hard. Okay, this was yesterday. Yesterday's candle dumped hard and it took out Wednesday's candle's low. Now, given that it took out Wednesday's candle's low, it gives us information of what we can expect of Friday. Yeah, this is Thursday. So it gives us what we can expect of Friday. So we can expect today to be continuous bearish momentum. Okay, but then we can also look at, if you want to, you can also look at price action and some of the things that we can look at in terms of price action. But if we were to consider daily candles, the daily bias according to the daily candle closure, yesterday's candle closure is pretty much bearish. Why? Because it took out the previous day's the previous day's low. Okay, so if I may label that for you, that was Wednesday's low. Okay, let us make this a line. Yeah, something like that. So Wednesday's low was there, and then this candle of Thursday came and sold straight through the Wednesday's low, and it closed lower. So basically, when we see that, we consider that it has taken out the previous day's low and it closed bearish. Now, given that it took out the previous day's low and it closed bearish, it gives us information about today. Today is very likely going to be a bearish day. Okay, so that is how we tell that today is highly bearish. The bias is highly bearish according to the candle closures of the previous day. Now, doesn't mean that when the day is bearish or when the daily bias is bearish, we might not see some bullish tendencies in certain assets. For example, even this day, it was first bullish because it printed a green candle. Now let's go to lower time frames so that you can see what I'm talking about. Let us label the day's low. Okay, this is Wednesday low, so this is Thursday candle. Okay, so let's go on the 1 hour so that you can see what I'm talking about. Okay, so when we come to the 1 hour, this is Wednesday low. Okay, this is Wednesday low. That's what we labeled. So what I was saying is that it doesn't matter if, for example, the bias can be bearish, but then the day can pump slightly. Within that day, we can get pumps. Okay, doesn't matter. Doesn't mean that the market won't go up. If the daily bias is bearish, doesn't mean that the market won't go up. So we can see Bitcoin significantly gained a whole 2% yesterday. Okay, it significantly gained a whole 2% yesterday, but then immediately it sold off from that supply zone and it went strictly bearish. So when we see that, it dumped more than it pumped yesterday. So it's perfectly aligned within what we call the daily bias. So basically what Bitcoin was doing is something that a gentleman who was training this morning has just talked about. Bitcoin went, found our supply zone there, and basically was collecting some momentum to do what? To sell. And when Bitcoin, of course, got up to our supply zone, they are bearish. Yeah, when Bitcoin got to our supply zone, perfect trading here. Bitcoin went, got to our supply zone, and immediately it got to our supply zone, it sold aggressively. Just to align into our what? To perfectly align into what we call the daily bias. Daily bias was bearish on Wednesday. Rather, Wednesday's candle in relation to Tuesday's candle gave us a bearish daily bias. If you may see it out here, okay. So Wednesday's candle in relation to Tuesday's candle gave us a daily bias that Thursday is going to be bearish, regardless of the fact that Thursday pumped first. When you go back to your price action, you'll be able to see that it was only hunting some liquidity, or what we call hunting, we call it imbalances. It was clearing market imbalances before it continues on its bearish journey. So don't be disturbed, or don't be confused that I'm telling you that daily bias is bearish and then Bitcoin is printing a green candle. What am I talking about? And stuff like that. It usually happens in the market like that. For example, when you look at, this is the Tuesday candle, right? This that you're seeing here, the one I'm going to highlight here. This is the Tuesday candle. Okay. Now the Tuesday candle closed bearish compared to the Monday candle. It told us that Wednesday is going to be bearish. That is what it did. Now when the Wednesday candle closed bearish, that is, it took out the Tuesday candle's lows and it closed heavily bearish, it told us what Wednesday candle is going to look like, basically giving us the daily bias of the following day. Sometimes it can change because the market takes on its own course, okay, but this is just a rule of thumb to try and determine the bias of the day. Okay, now like I told you, Tuesday candle closed bearish considering the Monday candle, gave us information about the Wednesday candle. Wednesday candle closed bearish and it took out Tuesday candle's low, give us information about the what? The Thursday candle. Now Thursday candle has closed bearish and it took out Wednesday candle's low. That should give us information about today's candle, which is Friday. So today we have a bearish market bias in the market. So when you determine the bias of the market, what do you do with all that information? Because we've done our sentiment analysis, and then we've looked at trading view here, rather coin market cap here. The market is in the red. We've looked at what did we look at else? We looked at the risk on risk off meter. The risk on risk off meter basically gave us Bitcoin being in the what? In the neutral. It is kind of cutting and it's coming a bit risk on, because this is pretty active. It is going to move as the day goes by. Yeah, this one is very dynamic. It is going to move. You see, it just moved back, so it moves as the day goes by. But when we look at this, it is staggering in the neutral zone. Yeah, for us to confirm that the bias is, or the sentiment is bullish, is basically when it goes not in the middle but slightly to the 100 mark. So we've looked at the risk on meter, and we are seeing Bitcoin is staggering in the neutral area. And what else did we see? We also came and we looked at the candles, and we could tell that the candle closure of yesterday gave us a bearish bias in the market. We can also look at another piece of information to try and gauge where the market stands. The other piece of information is basically going to be right here. Okay, the fear and greed index. The fear and greed index is in the fear zone. Okay, it is at 30.31. That is really a fear zone. A lot of investors are not really taking any action in the market. They're fearful. Selling pressure is significant in the market. So fear, when we are in the fear zone, of course the market is giving us bearish vibes. That is basically what we can get. When the fear and greed index is in the fear zone, we're getting bearish vibes. What does that mean? That means that the market has a tendency of selling more than buying. It has a tendency of going down more than going up. This is very good for you to determine a lot of information about the market. So when we look at the ETF trackers, we are looking at the ETF trackers. We have a lot of selling pressure in the ETFs. When you see these bars at the bottom and not at the top, that is basically telling us that ETFs are selling. Yeah, ETFs is basically where most of the money is. This guy is really, when they buy, the market goes up. When they sell, the market goes down, right? So we can see the daily total 600 million has left Bitcoin and Ethereum. Okay, we can see 400 million has left Bitcoin and 181 million has left Ethereum. So when we see these bars at the bottom and they are not at the top, we are basically considering that there is some selling pressure coming through from the ETFs. That could explain why Bitcoin has been going down the past 3-4 days. Okay, now when we come down here, the altcoin season index, of course, it has tanked. It has gone below 30 out of 100. So we're seeing it at 28. Basically, that means Bitcoin is gaining over altcoins. There is more money in Bitcoin than in the entire altcoins added all together. That basically shows you bearish vibes. Okay, those are all signals or indicators to show you bearish vibes. The market is very, very sluggish. The market is slightly slow considered to normal days. Okay, now when we look at the other last thing that I want to talk about, that is the market dominance, which shows us Bitcoin dominance that has significantly gained in the past week. Okay, we're seeing Bitcoin dominance has taken the spot all the way up to 59.36%. What does that tell us? That tells us that a lot of money has left altcoins and a lot of money has flown into Bitcoin, or just people are just selling altcoins and they're not even buying Bitcoin, they're just selling altcoin. But that basically will show you that there is a lot of selling pressure in alternative coins compared to Bitcoin. So let's look at Bitcoin dominance at this level. Guys, if you are confused at any point, please just let me know. I will come through and I will be able to take you step by step. Okay, I don't want to leave anyone behind here. So when we look at Bitcoin dominance, it has significantly been gaining. Yeah, this spike is when we had the liquidation event. That must be 10th of October. Yeah, that is 10th of October. So since that happened, we are seeing significant higher highs and higher lows in Bitcoin dominance. Okay, we see Bitcoin dominance was tanking, but then it got to this point and it started gaining. Okay, and we have not yet seen any significant weakness in BTC dominance, except when the market tried to recover at this point, and then from here we are seeing a gain in BTC dominance. Okay, higher highs, higher lows, higher highs, higher lows, higher highs, and currently we are seeing BTC dominance is printing higher, which is almost hitting the 60% level. We are at 59.99%. So that explains a lot of coins, that is altcoins, are losing money in terms of there is a lot of selling pressure that is exerted on altcoins compared to Bitcoin. It does not necessarily mean that there is a lot of buying pressure on BTC, but yeah, we can try and take that information. So when you see BTC dominance gaining, it is one of the indicators to show you that there is some significant selling pressure on altcoins altogether combined. Okay, we've seen Ethereum dominance that has gone down all the way to 12.5%. It was significantly higher a few months ago. It got to around 14, 15, but we're seeing it now going back to as low as 12.55%. What does that tell us? That tells us of our sentiment analysis that the market is bearish. Okay, the market is bearish in the short term. Okay, that tells us also about the day to that the market is slightly bearish. Okay, we may when we look at the chart, of course, you can have confirmation through market structure on assets like BTC, and one thing that you're going to see, for example, on BTC, the market is ranging. Okay, the market is ranging. We are just in a range. That is what we can see on BTC. We are seeing coin is this one also. Okay, delete this one. Okay, I'm not understanding this. Let me get Binance. BTC USDT. Okay, let's go with Bybit. No problem. All right, this is better. This is better. So what we see here is Bitcoin is ranging in let me hide this. Okay, so we are seeing that Bitcoin is significantly staggering within a range. Okay, it is staggering within a range. If we were to label this level, let's consider the candle bodies. If we were to label this level, and also we consider the candle bodies at the bottom, we can see that Bitcoin has clearly given us a clear support and resistance level. So Bitcoin is staggering within that range. You get it? So what can we conclude in terms of market structure of BTC in this state? We can say Bitcoin is neutral. It is not bullish. It is not bearish. It is just staggering within a range. We call that consolidation. You'll find that we call that that the market is consolidating within a given range, or we call it the market is I don't know. That is the nomenclature that we usually use in terms of things like that. So that brings me to the next part of our discussion today. I want us to talk about support and resistance. But before I move on to the next part of our discussion today, I want to know, do we have any questions as regards to the overview that we have looked at so far? I have not looked at the fundamentals. I've basically gone through sentiment and how to do your sentiment analysis. If I was way too fast, please let me know. This is your time. If you have a question, please let me know. This is still your time. Okay, I'll just get back to the call and see. Fred has no question. Katniss has no question. Anyone else? Anyone with a question as regards to the overview of our sentiment analysis? Now that was a rough approach to our sentiment analysis, but I tried to tap on most of the points and most of the areas that you can look at and how you can interpret the information there. Any question? Any comment? I'm following closely. Thank you. Okay. All right. Given that we don't have any, I will assume that we have been able to pick up thoroughly well. All right. Before I can continue, I can bring you on this page. Now, when you look on this page, this is my watch list, and this is my watch list for most of the coins that I participate or I involve in terms of trading. When you look at my watch list, one of the things you're going to see is I've told you everything totally opposite from what this watch list is giving us. Now why am I saying the day is bearish and we are seeing bullish what? Bullish momentum on the chart, or rather on my watch list. My watch list is in green. Why am I saying that the day is bearish? Why am I saying that we are consolidating within the range and the watch list is in green? Now let me consider the second watch list. I have a secondary watch list here, and we can see green all over except Toncoin. Okay, green all over. We go to this third watch list. I have green and only 2 reds, and then I have my fourth watch list, and then green everywhere. Okay, we're seeing green everywhere. There's some tokens like Zen and API3 that have significantly given us good numbers already. Okay, we're seeing all of that. So what am I talking about? I'm saying the day is bearish, the bias is bearish, and then the market here is giving me a totally different outlook. Now I have a fourth watch list, and all of them, by the way, are giving us green. Okay, we see here we have only 3 reds, and then everything else is in the green. What do I mean? All right, so I'm going to answer that question. I'm going to answer that question, even though you did not ask it. So what this basically means, when we come to CoinMarketCap, first of all, we are seeing red. Yeah, red. Yeah, but then when we come to current data, the most recent data, we are seeing green. Now, not to be confused by any of these things, let's go to RoyalQ, because most of you are also going to view this data from RoyalQ. So let's come to RoyalQ. Okay, so when we come to RoyalQ, it is telling us red. Now, it is important for us to understand the time frames within which these digits are calculated. Oh, let me not forget Binance. Some of you are bright enough to come and look at Binance and try and be able to tell what is happening. Now, Binance has a list of gainers. Significantly, Binance has gained on different assets. Zcash, Avant, yeah, we've gotten some gainers here, and yeah. So we see in the gainers list, of course, we will always have green in the gainers list, and some of them will definitely outperform the rest. Okay, just like we will also have losers. Okay, losers, and we can see losers are significantly less in terms of percentages. Yeah, we're seeing losers are having the highest percentage being -5, and gainers having the highest percentage being a 16. What does that tell you about the market? It tells you that the market is tending towards the green side, lesser than towards the red side. Why? Because the greener side has bigger numbers compared to the red side. Okay, so all of this information is important, and you need to be able to understand and interpret it properly, so that you're not misguided or misled by anything. Okay, so the first thing that I want you to understand is you need to be able to tell the time frame within which these percentages are being calculated. Number one, on RoyalQ, it is very clear. It is telling us this is the 24-hour change. What does that mean? When you count, my time is 9:37 East African time. So when you count up to 9:37 yesterday's time, and you mark the price level and the current price level, the change is -3.95% or 4% on KDA USDT. So basically, this number that you're seeing here counts the price change between the current hour and 24 hours ago. Okay, it is basically how it calculates. So this is on a larger time frame. This is basically showing you on a larger time frame. Yesterday at the same time, the price has changed this much. Okay, now this is usually very important to note, because it tells us how the previous day performed, how the price has changed over the last 24 hours. Now, that is the same thing that you're going to find on CoinMarketCap. CoinMarketCap is going to give you data in the last 24 hours. Now it is going to take the price from the last 24 hours, current time, then count 24 hours ago. Okay, and then it will show you the price changes. Okay, it is not yesterday like the chart, the candles on the TradingView daily chart, daily time frame. No, the daily time frame on TradingView is going to be at what time it measures price changes. However, these aggregators, this data is basically showing us price changes within the last 24 hours. That is, count from the current hour and then count back 24 hours ago. So it generally gives us an overview of how price has changed, and it can give us a gauge of how we can gauge in terms of price changes. Now, something different is considered here on TradingView. I'm yet to find out the 1.2% that TradingView is giving us, but okay. All right. I think I know what TradingView is giving us. Let's try Hype for 8. Yeah. Now, TradingView, on the other hand, is giving us the daily candle. That is, since today started, how has price changed? You get it? So it doesn't give us the last 24 hours, but it gives us the daily candle. Now, the daily candle, according to my time frame, East African time, the daily candle starts printing at 3 a.m. in the morning. 3 a.m. in the morning, East African time. That is when the daily candle starts to print. That is when the previous day's candle closes and the new day candle opens. So TradingView is giving us the daily candle price change. I hope you now get the difference. Okay, so TradingView has much more closer or much more recent price changes compared to the other to the other sources. For example, Binance, TradingView, CoinMarketCap, or even RoyalQ. Okay, Binance is going to give us Binance is going to give us the daily candle as well, but then RoyalQ is going to give us the past 24 hours, and CoinMarketCap is going to give us the past 24 hours. What am I going to go with? If you understand which data, where the source of the data comes from, you're going to be able to disseminate the information better. Now, for example, this one is giving us, since today started, the daily candle is green. You get it? The daily candle has moved in the green direction. That is on TradingView. But then RoyalQ is going to tell us since the past 24 hours. Now, a much more reliable information in this case is going to be the one that is showing me the past 24 hours rather than the daily candle. You get it? The daily candle can wick in higher and then come lower. I don't know whether you get the point. Like we see here, this candle can weaken high and then it goes low, okay, and then it settles wherever it decides to settle, whether bearish or bullish. Okay, so if you're looking for which information to rely on more, you can rely more on the information that you're seeing on RoyalQ, which is giving you a 24-hour change in terms of price, or even what you're seeing on CoinMarketCap. Okay, so that is in terms of how price has changed within the past 24 hours or within the past day. But this is going to be dependent on who is looking for what in the market, what you're looking for and how you're looking for it. All right. So I talked about this. You said yes, I was telling you that you're seeing green here, and then yet I've told you the day is bearish. Yeah. Now, two things can answer that question. One, I told you already that we are in a range. For example, on Bitcoin, okay, we're in a range. And what did BTC do? BTC came and it is staggering in what? Within our zone. Let's go to Bybit, where I was previously. Yes. So we are in a range, and it is important for you to understand price action so that you can tell the differences of how these things, how price reacts and how price shows up in the different areas. So since we are in a range, this is price action. Okay, this is how price is reacting off of the zones or levels it has created. We have seen price gave us resistance here. It came down, gave us a support level there. It went up, gave us resistance at the same level like it established previously. It came down, and as we can see, price has bounced off of what? Off of support. Now, if you can understand and be able to tell that, oh, price is just staggering within our range, you can clearly be able to tell that, oh, price is basically just bouncing off, but we need to do what? To have clear confirmations. But remember, what I am sharing with you here is overall analysis before you can go down and take your trades with your confirmation on lower time frames. Okay, overall analysis helps us understand the bias and which side are we going to go on the market, especially those of us who are in futures trading. Okay, we are going to decide, it's going to help us define which side are we going to go more, or which side are we going to lean towards more in terms of the market. Okay, all right, so that brings me to our next discussion, which is support and resistance. Support and resistance is a very, very crucial concept in technical analysis and price action. Support and resistance and how to identify this is going to be very, very crucial for you if you are to use it as part of your strategy. Okay, but before I go into support and resistance, let us first define what is it and how can we identify it on the chart numerous times. Okay, now support is basically a level of price where price basically bounces off of multiple times. Now if I was to illustrate, let me use Ethereum in this case because I think I have a very clear example on Ethereum. So if I was to illustrate, this is a very clear example of a support and resistance. I'm going to come in at this level. Okay, now at this level, price of Ethereum started consolidating. You can see price came in and then it started staggering within a range like that. Okay, and what did it give us? It gave us support and resistance. Okay, we can clearly see that the resistance line is clear. Now, how am I going to label this? Rule of thumb, everyone, very many different people who do different technical analysis will label support and resistance differently. However, one thing when you're learning is you need to decide which one am I going to go with. Okay, which one am I going to go with, and you don't have to mix them all up together. Now, I love going with candle bodies. Yeah, I love going with candle bodies as my resistance level, or as a level that I label that this is my considered or considerable area of resistance. Okay, so let's just chop our chart to that level. Okay, so I'm going to see, of course, what have I done here? I've found a level at which the price of the green candle closed and the red candle opened. Okay, when the price entered here, it basically resisted at that level. Now there are wicks, of course, there are wicks there, and we are going to see that. But as a beginner, let us start with labeling our resistance level by just the candle bodies or the candle closures. Okay, now we can use that as our resistance. Okay, now we can notice that price respected this level multiple times. We can see price went down, and when it came back, it still reacted from that resistance level. It went down. When it came back, it still reacted from that resistance level. We can see price went down. Still another time, it reacts from what? From that resistance level, and then price continues going down. So that way, we can tell that price gave us a point of resistance. Yeah, we can label that and give it to be our resistance line. Now, how are we going to identify support in this case? Now, in this case, support is a bit tricky, if you may see, if you may not with me. The support is a bit tricky here. Why? Because first, if I were to follow what we said, of course, this is what we're going to do. This is the level that price reached at, and it started going what? And price started doing what? price was rejected here to give us this candle. So I've labeled where we start from at the top here, basically where price came down, gave us that top, and then it returned. Okay, so if I was to label this as my resistance area, of course we can see price violated that area one time, price violated it, price violated it, price violated it. Okay, so basically that means this cannot be a highly accurate resistance level. Okay, however, we can find that this one can work as a probable resistance level. Okay, but then even so, if we were to say, okay, this is our support level, when price gained support here, it went down, but as it was going down, it was resisted here. Why? We are looking at candle closure body closures, candle body closure. So when price was going down, it was resisted at this level before it turned to go up. Okay, so I might try and label this as my what? As my support level. Sorry, I used the wrong one. So it was supported at this level and then it went back. Now, if I was to consider that, okay, price went up, still resisted, came down, this level is respected, resisted, this support is respected, resisted, and then we see price give us a false breakout. Okay, this was a false breakout before price finally pushed back up into what? Into our resistance level. So it price basically sold aggressively, gave us what we call a false breakout on our support level, and then it immediately recovered, retested our support, and pushed higher. Okay, so what can I conclude here? What I can conclude here is, as I am labeling my support level, yes, I have seen my resistance level, which was very clear, probably what I labeled first, and then price came and took a turn from here, and then it went back up. So that means this passes as my what? As my valid or most probable support level compared to this resistance. Now, when you get to such price action like this one, which is very, very hard to notice or very, very hard to determine what are the levels and how am I going to plot my support and resistance, there is a trick that you can use. Come to your chart here. Come to your chart here. You see this? Come there, and then you can come to chart type, and then you can convert your chart from candles. Don't forget the formula or how you got here. If you forget, you will have to look for someone. So this is the normal candlestick chart. Come and take it to the line chart. Okay, now when we put it to the line chart, things have become much more clearer. Do you see that? You can see things very, very clearly. Why? Because I see this is my level of resistance and it has been respected one time, two times, and currently we are seeing prices touching there the third time. And we can see this is my support. Okay, price came down here. Of course, price significantly didn't reach this level. Price gives me a false breakout, and then price continues up. So basically, this level is still respected. So how can you draw? You can clearly draw your support level and your resistance level by converting your chart into the line chart. You'll be able to see much more clearly. Okay, you'll be able to see much more clearly, and it will take out the noise of the wicks. That is why I told you I like it, especially when you're beginning, or when you're starting out, to label these support and resistance level. Go for candle body closures rather than wicks. We are going to get to the level where wicks can also be important, but for what we call levels, support and resistance levels, you can go for candle body closures. And if it's too confusing, you can convert the chart to a line chart. Now, how did I do that? I'm going to come back down here. I'm going to come to chart type, and then I'm going to take it back to candles. Okay, this is where we were. So when I go back to candles, you can clearly see I was able to label out my resistance line and my support line, and the price, as we can see, has been able to react clearly from those levels. For example, now there is another support level that was established here. but because of the wicks, it might not be, very clear. Now let us see how price reacted. So when we see price continuing here, of course, it broke out of our what? It broke out of our resistance level. However, of course, if you were able to do price action and everything, you would be able to note that this is a key level. Of course, I labeled these things already, but if we were just to look at how is price behaving in terms of in line with my what? In line with my level of what? Level of resistance. So we can see price was weakening slightly above our resistance level, but it never really gave us candle body closure. So when we see this green body closing, usually the trading strategy with support and resistance and such things like breakouts, whenever we see a breakout from our level of resistance, we want to see the price retest that level and then continue, or we want to see continuous price action before we can jump into that trade, before we can consider that that is a breakout trade and we go with it. For example, when price came and closed below here, yes, you want to see price retrace to this level and continue downwards before you can continue with the market. But before price does that, price can give you a fake out like we saw here. Price closed below, but then it finally pushed back up. So that way you can, for you not to become exit liquidity or to be taken out, you need to get your confirmations right. For example, if you wanted to trade this breakout, you've seen, okay, the market has pumped green, the market has gone through with momentum on our level. Try and see if price comes and retests this level, or try and see if price continues with the momentum, maybe with another candle. Then you can confirm that price is now going what? Price is now going extremely bullish. Okay, but what we see here, price breaks out and then price returns and it breaks right through it, comes, reacts from our resistance level once again, and it's back in the range. Is there any other question? Sissy, you want to say something?
No, thank you, sir.
Okay, you can mute your mic.
Okay, please.
All right. So what do we see here? We see here we can see that price was staggering within a range, and it respected our levels of what? Of support and resistance. So what have we mastered, or what have we tried to learn here? We've tried to learn how to draw a support line and how to draw a resistance line. And I picked this example because it is confusing. Now, the rest of the examples might be easier, okay? But I picked this example because when it is confusing, you need to be able to know at least what do I do when price decides to give me such things like this one, okay? We said we drew our resistance line by looking at the candle body closures, whereby the green candle closed and the red candle closed pretty much in a straight line, and we decided to draw there a horizontal line, okay? And then we looked at the candle body closures of the leg that came down from our resistance level. Where was price supported? Okay, when we look at that, we saw the candle body closures of the red candle, the green candle here, of course, and then we were able to plot that as our support line, and we can see price respected that level not 1 time, 2 times, of course 3 times, 4 times, 5 times, 6 times, broke through, but then it came back, retested 7 times, 8 times. So basically that was a perfect what? A perfect level of support. Okay, if we continue with price, we can try and see what happened thereafter. Of course, price just broke through our level significantly here. Okay, now when price breaks through and crosses, that means it takes out the previous low. It has basically given us different market structure. Okay, this does not hold any longer as long as price gives us a lower low. In other words, it takes out the previous what? The previous lows that was established. You see, these wicks don't mean anything, but then when we have candle body closures below previous lows, of course, that basically gives us a change or a shift in what? shift in the market structure. However, support and resistance, like we know it, is part of an overall price action way of reading the market. You cannot take support and resistance alone. You need to be able to understand the different concepts of the market, like market structure, for you to be able to fully read and understand the market. Okay, we see, of course, price came down and price basically tapped into this area, and then price continued upwards. Okay, now I will not go deep into why price did this and what basically this means, because the scope of our session today is basically to talk about support and resistance. So I'm going to give us another example which is less complicated than this one of Ethereum of how to draw support and resistance levels. Okay, so just so you know, price, of course, when it did there is what we call manipulation in the market. This is just what we call a manipulative move. Price fakes as if it is going to go and sell extremely low, and then finally price comes and breaks through. So basically what we see here is market manipulation. It usually happens. Price broke above, people sold. Okay, now Ethereum is going to go high, and then they sold against them, so they lost money. And then it came down, it broke below. Of course, people thought, Ethereum is now bearish, and then they sold, and then it went up. So price manipulation is basically what's going on here, but that is beyond the scope of our session today. Hopefully we can look at that in terms of price action next time when we have to meet. But basically what we are seeing here is we are seeing the three market phases of what we call, some traders call it the power of three, where they consider a phase of the market which we term as accumulation, manipulation, and distribution. So that is basically what we are seeing here. Typical accumulation, whereby we have an accumulation phase, which is this one. Market accumulates, and then the market manipulates. You see, so the market goes the opposite direction before it finally takes off in the proper direction. So that is basically that is one of some things, that concepts that traders use: accumulation, manipulation, distribution. So these are three phases of the market, whereby the market first of all accumulates, as we can see here, and then it manipulates in the opposite direction, which it does not intend to go, but it manipulates to take some liquidity of certain rush traders and over leveraged traders before it finally distributes in the actual direction that it is going. So when I play out the market, you're going to see that the market considerably went significantly bullish. Okay, went significantly bullish, but before it went bullish, it first of all manipulated, took out some traders who thought, now the market, it has changed character, now the market is bearish and stuff, and then they went short into the market. Of course, it significantly went down, but then as they were shorting, the market finally turned against them and significantly went into the proper direction. So we can cover that in a different session: accumulation, manipulation, distribution. But those are three phases of the market. The market usually does that. If you learn it, you notice it again and again and again. Different market in different market cycles. Okay, but let's look at another example of support and resistance. I had someone. Did you have a question? Did someone have a question or something to say? Comment? Nothing? All right. Since it's nothing, we can continue. So, for example, this is Dogecoin. And when we look at Dogecoin, is someone saying something?
Yeah, just inquiring. Just one question.
Yes, please.
When you're drawing the support and resistance, how far back do you go to determine from where to draw the support and resistance? I mean, in terms of time frames.
Good question. Now, that is going to depend on which type of analysis you're trying to make, and which type of analysis you make is determined by which type of trading you do. If you are a longer term trader as compared to a short term trader, if you are a longer term trader, you're going to go to higher time frames, and you're probably going to go way back into history, okay, to try and determine which level is support and which level is resistance. But for shorter term trades, whereby that is where I choose to focus on, because most of us are daily traders on RoyalQ. For shorter term trades, we are going to look at most recent price action, and we're going to try and draw support and resistance on most recent price action. Okay. If you are doing overall analysis, larger time frame analysis, then you can go on higher time frames. For example, when you look at this analysis right here on Dogecoin that I did a while ago, I was determining an important level on the chart, and I drew my resistance line and my support line. Okay, so this was significantly something that I was choosing to trade over a longer period of time. So when you look at this, now this is another type of support and resistance that I have not yet talked about, but I can clearly talk about. Support and resistance in a ranging market, you draw it the way I have shown you. For example, this is a ranging market. Okay, we are having a ranging market. Current price action is ranging, so we draw our resistance at the top and we draw our support at the bottom. Okay, if you are following very well, this is where I'm going to plot my support level. Okay, see that? I'm going to consider this. Now when I consider that, of course I can see this still counts as my what? As my support line. Okay, now this is a short-term trade. Okay, and because I've determined that the market is in a range, okay, I can clearly draw horizontal support and resistance lines. But if the market is trending, we can then go to what we call the trends, or what we call the support and resistance, which is in the form of a trend line. Okay, for example, this market is trending. This is on the daily. I'm still on the daily, but on the daily here, current price action, the market is what? Is ranging. So I can only draw horizontal support and resistance. Are we together? So in a trending market, I can find myself that I can clearly draw a trending what? A trending support and resistance, such as the one that you're seeing here. Okay, this brings me to what we call price chart patterns in price action. When we are learning price action, there is a section we call chart patterns. So it's usually how we draw these trending or trend line support and resistance. So what we are seeing here is we are seeing this is significantly our resistance line, and this is significantly our support line. That is where price is bouncing off. Whenever it falls, it bounces off of this level, Now, this was basically a trade that I took while I gathered confluence. I expected that, of course, we are going to find demand down here. If price continues to go down like this and then it finally picks up from here, we could significantly see a pump, and that paid off significantly, perfectly well. However, when you look at this, to answer your question, I was analyzing on a larger time frame. Okay, even if I come and I measure for you the take profit levels of this trade, let's see, price range. So when I measure from this demand level to the probable selling point, that would be my probable selling point. Why am I calling it my probable selling point? Because this is the earliest I can see a candle wick, okay, from the previous price action. Of course, there are some of them that are down here, but personally, me, I'm a swing trader, so I analyze on larger time frames and I look at bigger price action. Okay, so when you look at this kind of price analysis, I did my support and my resistance and my support, and I also combined the demand area here. Market came down here, touched my demand level, significantly showed me rejection of the demand level. I entered the trade. I targeted a 55%, like that. Okay, so that is what you're looking at here is price action. Price action involves supply and demand, ability to identify supply and demand. It involves ability to identify candlesticks and candlestick patterns. It involves ability to identify support and resistance. Okay, so we combine those three things and we can use them as gathering confluence. Gathering confluence basically means similar things that tell you the same thing. What I'm trying to say is that the market is giving me a falling wedge, which is bullish. Okay, the bullish market gives me a falling wedge. It is giving me a bullish signal, and then confluence is the falling wedge is finally finding me at a demand level, which is also telling me that that is bullish. Okay, that is a bullish sign. And then when we come down to the candles here, we can see candles have rejected this area with momentum. Okay, rejecting this area with momentum, of course, I can clearly tell, okay, now we are going extremely bullish. Of course, now here, if we were to confirm there is a fair value gap, this is basically the entry point where someone could find an entry here. Fair value gap, and then go with the market and probably try to find a what? Try to find a trade, or a selling point or whatever. So on lower time frames, on daily trading, of course, we can identify our support and resistance levels on the 4 hour. You're not going to do that on what? On the 1 hour. Okay, you're going to come on the 4 hour. You're going to try and label your support and resistance. Now, if you were to notice this very well, it is not so different from what we've seen on the daily. So I'm going to maintain my daily labels. Okay, I'm going to try and maintain my daily labels for my support and resistance. So if you notice very well, here we have a clear what? Resistance line. So I can come and I can draw it there. Okay, we are seeing price came down, price rejected that level, came down, price faked out of that level, price has given us a fake out at the top and a fake out at the bottom. You get it? Now I'm going to maintain those. Now when you look at this, price is just ranging within this. Okay, we are seeing price has not continued downwards. Of course, it has not taken out this level. So basically that is a fake out. When am I going to consider that price has finally considered? Now I shouldn't consider this line as my support level any longer. When price takes out this level. Okay, when price shifts market structure, that means when it gives me a change of character down here, I'm not going to consider this level anymore. Now I'm going to even delete it from my chart. Why? Because price has given me something new to consider at the moment. Okay, so if you are to ask how far back in history do I draw my support line and my resistance line, it is going to depend on which type of trading you're doing. For daily trades, you want to do this on the 4 hour. You get it? And then you want to get your confirmations on the 1 hour. But every trader is different. You might find that someone takes their entries on the 15-minute. Now, if you take your entries on the 15-minute, that means you're trading faster. You want to enter the market quickly and get out of it much more quickly. Okay, so if you're taking your entries on the 15-minute, you find that you can you can draw your levels on the 1 hour. Okay, you can draw yes, you can draw your levels on the 1 hour in terms of your support and resistance, if that's what you're labeling. And then you can do what? You can take your entries on the on the 15-minute. But one thing you should remember, the chart is, we use the word the market charts and time frames are, what's that word? Anyway, the word that I want to say, what it means is that the way you analyze the 4 hour is the way you analyze the 1 hour, is the way you analyze the 15-minute, and the concepts will always be right. You get it? It does not change that if I'm on the 15-minute, I have to analyze the market differently. No. The way you analyze the 1 day is the way you analyze the 4 hour. I mean, the way you look at candles and how they react Those are the same things that you're going to look for when you go on lower time frames. The only difference is when you go on lower time frames, it's very, it changes very quickly. It shifts very, very, very quickly. In other words, it has a lot of noise. Or it is best suited for traders who want to enter the market very quickly and get out very quickly. So if you don't want to get the volatility and, especially if you're doing futures trading and you don't have an edge, because you might think the market is going up and then it's just a fake out and then it continues downwards, you can keep away from the lower time frames. Okay. That is why we encourage that you analyze on the 4 hour and maybe take entries on the 1 hour. That is for day trading. But then when you go lower and you take your entries on lower time frames, it basically means you're tending so much towards the scalper. The scalper is the trader who wants to enter immediately and move out immediately and take their profits. Now, no one tells you not to be a scalper if you know what you're doing. Okay? Know what you're doing, can go ahead and do whatever you want to do. And as long as the market pays you, the profits are yours. Okay? But scalping, when you don't have an edge, it might drain you. If you have stop losses, if you set stop losses, you might hit many of them because of the volatility of the market on lower time frames. But when you finally build an edge, you can go lower time frames and you can find trades. Otherwise, the advice is analyzing the 4 hour, set trades in the 1 hour and let them play out. That will minimize the noise that you'll find in the market. Yep, I'll minimize it. So yeah, we can see Dogecoin here. We have our staggering. The price is basically staggering within that area. Okay. Now, on the other hand, the last thing I want to talk about support and resistance before we can close is you realize how it is hard sometimes for you to be able to tell support, especially the horizontal type of support and the horizontal type of resistance. Usually, this is what I do. This is personal. I do not put a line because it is hard to determine support as a line. So I put a zone. This is not a supply zone. I don't want you to confuse this with a supply zone. This is just me trying to label support. Okay? It's just me trying to label support and resistance in the market. So instead of using a line, because especially with this this horizontal form of support and resistance, I can draw this, and what I do is I will go ahead and I will write in it so that I'm not confused. I can come here and I write in it that this is resistance. I can put 4H resistance. Okay, why? Because price is being resisted within this region. You get it? Eh? Within this region. From this side, you can see price reached here, got resisted. Price reached here, got resisted. The same thing, price reached here, got resisted. So that is a resistance area. Okay, that is usually what I go for, especially with horizontal, leave alone the trend lines, but with horizontal and support and resistance, I usually go with what? I usually go with that. So I can also come down here and I can notice, okay, price is generally tapping from this what? From this area. And then when I spread it out clearly, you can see that price is clearly tapping in that area for what? For support. I can label this for H support. Okay. And what do we do when we are trading this? Of course, when price taps into your area, you can look for what? For signals. Signals. For example, here, price tapped in our area, bullish engulfing. I can use it as a confirmation. I can gather more confirmation information and try to take a trade, probably a buying trade in the upward direction. Why? Price has respected our what? Our support level. because we see price was supported from here initially, price got supported from here second time, and then price is supported from here another time. Okay, so that is just a tip on my end. You can still draw the lines if they are better for you, but usually that is what I go with. I draw a significant level, a zone from where price is gaining support. Why? Because usually price is not going to bounce off of that straight line all the time. Okay, it might not bounce off of that straight line all the time, or it just helps me to see where price is reacting from multiple times. Now, if I may use what I gave you initially, this is what you would do. Okay, this is what you would do. I can clearly see this level is basically the one being respected, and then I can clearly see this level is the one also being respected. However, if I went ahead to draw this is what you're going to see. I'm going to draw this, of course. I'm going to put that as my support, and then I'm going to put this as my resistance. Okay, that. Now, when I draw it that way, two things are going to happen. When I go back to my candlesticks, this is what we are going to see. Now, for someone who understands how price acts in terms of price action, this is not a problem. Why? Because price goes down to sweep liquidity. It usually happens. Price sweeps liquidity. It gives us fake outs. Okay? Price gives us fake outs always. Okay? So for someone who understands price action, and this is where you'd really need to invest in trying to understand these things. Okay? What did I do here? What I did is I drew a line at the candle body closures. This is what I told you in the first place. Candle body closures. Okay? But then when price does this, sometimes some people get confused. Get it? They don't understand that price does fake outs and price sweeps liquidity. But usually price will do that, especially on support levels and resistance levels. Price will have the tendency of sweeping liquidity. But when you come up here, of course, you will see the same thing. Price did what? Price gave us a resistance, and then price respected it, and price swept liquidity. Okay, now if you don't understand liquidity and the concepts of that, this might be confusing. That is why I said I will go with what? A zone. Okay, a zone, and I label it. This is not a supply or demand zone. Don't confuse that too. This is not a supply or demand zone, but I will label an area where I see prices reacting from and treating that level as what? As a support or as a resistance. Okay, otherwise, when you finally understand concepts like the ability of price sweeping liquidity, then we can stick to the first thing that I told you, which you draw a line. If you're confused, you switch your chart to a line chart, and you will be clear. You will be able to see the levels that price is respecting in terms of support and resistance, and you'll be able to draw them. But then don't worry about this. These are just liquidity sweeps. Okay, there was a lot of liquidity here. Price came, swept the liquidity, went back. Okay, and there was a lot of liquidity here. Price came, swept the liquidity, returned, and the same thing is happening here again. Yeah, price went down, swept liquidity here, and it is returning within the what? Within the range. Overall, what do we see? What we see is price is still staggering within a range. It is not making higher highs, neither is it making higher lows, but rather it is consolidating. And with that, I want to come back to you. Any questions with support and resistance? Please present them. Any concerns and any questions? We've learned how to plot support and resistance, and we've necessarily pointed out the importance of, if the chart is confusing you, you don't know where to put your support, we said you're going to put that on candle body closures. So we said if the chart is confusing you, you do not know where exactly to put it, calm down, chart type, line. Things are going to be very clear. Okay, it is going to take out the noise and you'll be able to see clearly. Okay, and if you can see clearly, this is our level and that is our level. Simple as that. Okay, that is where support is. That is where price is reacting from clearly. Okay. Now, in trending markets, I think we can look at that support and resistance in trending markets another time, because of course there is what happens when the market is trending, what we call previous support turning into resistance, or previous resistance turning into support, something like that. But that happens in trending markets. But what we've looked at here is current price action. The market is not trending, the market is consolidating, and that is how you draw support and resistance in a consolidating market. Okay, so that is Dogecoin. We clearly identified our levels, and we know these are fake outs. Yeah, these are not real. They're simply fake outs. So when you're able to identify those, you can do what? You can draw your support and resistance, and you can take out the noise of, for example, liquidity sweeps and stuff like that. No questions? No questions whatsoever?
What is the relationship between that the support and resistance with the supply and demand zones? How do the two communicate to each other?
Wow. They are both concepts that we use in analysis of price action analysis. They are both concepts. And there are approaches that you can use to try and find trades in the market. How do they relate with each other? I think you're going to use one of them. Sometimes you might not use both of them, except if you're looking for confluence. You're going to have in killer. Support and resistance is going to be much more reliable in a ranging market like the one we are seeing here, Dogecoin. Supply and demand is going to be much more reliable in a trending market. Okay. Support and resistance is going to be much more reliable in a ranging market. Supply and demand is going to be much more reliable in a trending what? In a trending market. Now, for example, on my 4 hour, I have labeled, I can see it is a ranging market on the 4 hour. Let's go to the 1 hour. You will find that on the 1 hour, the market is ranging. Do you see that? Rather trending. Yeah, it is in a downtrend. Okay. Recent price action, the market is in a what? In a downtrend. So you can utilize both, of course. You can utilize both. However, one thing you should understand is supply and demand works very good in a trending market. Support and resistance works very good in a what? In a market. Now I need to, I don't know if I can. Okay, for example, what do we see here? What we see here is the market is trending downwards on the 15-minute. Let's say I wanted to take a trade on the 15 minutes, okay? So the market is trending downwards, as you can see. And how do we do? How do we draw supply zones? Of course, we are going to identify our momentum candle, and then we will go for the candle that comes before the momentum candle. I love seeing a huge candle that goes at least double for the size of the previous candle. Now, this one qualifies to become our what? Our level, important level of supply. Okay. So if I was taking the trade, a short trade to continue with the market, I would wait for the market to come back to this supply level, and then I could short the market. You get it? So how have I gotten this trade? I've got this trade through identifying the supply zone in the downtrending market. You get it? The downtrending market. However, I know very clearly that I can utilize this level as my take profit. Why? Because it is on a higher time frame, which is the 4 hour, my support level. So that means when I am taking a profit, for example, on such a trade, I would probably measure from there up to here, which is my what? Which is my support level. So since my profit range is 4.5, I can decide to take a 3%. You get it? A 3% short, which is usually going to be a very, very clear sure. Why? Because price will clearly come back to this level. Now, I don't want to risk if price doesn't reach there. So since I see 4, I can take a 2. I can take a 3. You get it? There are very many ways of taking profit, but those are some of the things that we can do. What we can try and consider. I don't know if I can find another example here. Let's try and see. Let's try and see where price respected demand levels and supply levels. Okay, there is another supply level that I can identify here. I'm going to label it. So I can see this is a clear supply level. So what do I expect? I expect if the market wants to, if the market wants to, it can finally come back, tap this level, and I can short it. You get it? I can find a short to bring it back down. Okay, why? Because there is a lot of imbalance that I can see on this side, and the market is still failing to go above our support level. We clearly were able to tell that this was a fake out on the 4 hour. Okay, this was a fake out, and that is why it is important for you to analyze on higher time frames before you come on lower time frames. Okay, for you to be able to see the bigger picture. This was a clear fake out. The price is coming back into this, but as we can see, price very likely might get some reaction from this level. Now, if price decides to react from this level, I can still get into a trade and bring it down here. So what have I been trying to answer about your question? What I've been trying to answer is I can label, for example, on the 4 hour we've seen that price is basically ranging, and I labeled my support and resistance. Now, if I decide to take trades on the 15 minute, I can then choose to use demand and supply for my entries. For example, you can see this clearly. This demand level, we see this momentum candle and then this candle here. It showed us clear what? Clear demand. And the price clearly came and tapped in this level before it continued. Okay. See that? Price clearly came, tapped in that level before it continued. So, in other words, this was a clear demand level that you could utilize and find something about how price is moving. Here, there is no demand level, but we can see price kind of reacted from that level. Okay. So because it is a upward trending market, I can identify demand levels in the upward trending market, and I can try to find what trades about them. Okay. So the lesson to do with demand and supply is vast, but if you understand how to use it, you are able to understand what I just explained. So that is in simple terms that can be used as a relationship. There are very many ways. There are very many approaches, like the one I used here. It's a totally different approach. But yes, as we continue to learn about price action, support and resistance, supply and demand, market structure, candlestick patterns, chart patterns, all of those concepts lie into what we call price action analysis. So you need to be able to understand all of them to try and do what? To try and put them all together, find a market bias, and take trades successfully. All right, guys, I think we have overpushed for our class today. Thank you for your attendance. Thank you for your questions. In case you have any, please utilize the group. I wish you a happy weekend and happy trading. I didn't talk about the fundamentals. I don't know if I can put a message on the group, I will put it and then you'll find it to do with the fundamentals. But with that, guys, I wish you an awesome afternoon. I wish you an awesome day. Maxwell, you still have a question? Or another person?
Yeah. Good morning, sir, team. Yeah, I was about to ask that when drawing the support and the resistance, do we consider the risks, the low, maybe if it is demand level, do we consider the risks?
I don't know how you know how to draw demand levels, but that can be covered in our next class. Demand levels, we consider the candle that comes before the momentum candle. We take the entire candle, the body and the wick. You get it? Yeah. You look for the candle with momentum pushing in the upward direction, and then you go for the candle that comes before it. Now that candle, you consider the entire range of that candle. That includes its body and its wicks. Yes.
Okay.